All right. Good afternoon, everybody. Thank you for tuning in. So, President Biden says inflation was 9% when he took office. Unfortunately, it might even be higher when he leaves. And we know it was 1.4%. So I don't know. I don't know where he gets that number from. But anyway, let me just show you a couple of things here. And if you're a retail trader, there are ways you can get exposure to commodities. All right. These ETFs that they have now are great. They didn't even have them back when I started doing this. So the only thing that has really kind of kept inflation, I guess, is kind of out of the headlines or whatever. The only relieving factor is this: oil has been going down. Okay, from April 4th to now, it's down about 9%. Now, look at this. It's holding, and it looks like it might be starting to rebound. So this price level around 78.50 first became support back here. Then it converted into resistance because we know levels that were support can turn into resistance. People bought here trying to get out here break even after the price goes lower. And resistance can become support. Seller's remorse. People sell, goes higher, like, oh, I'll buy it back if I can at the same price I sold it at. So if this starts to go higher, it's going to get pretty ugly out there because a lot of the other commodities are moving higher. And crude is the biggest part of the commodities market. All right. It's very inflationary. This kind of freaks me out a little bit here. This ISM report that just came out. These guys, this is a really cool report, and they followed various industries or whatever. Check this out. Prices for manufacturing up 5.8%. Actually, I'm sorry, this is services up 5.8%. That's even worse because services like 80% of the economy. Manufacturing is 20. Manufacturing up 5.1%. All right. Let's look at copper. That looks like inflation to me. All right. So let's just take a look at a couple of these things. And I want to show you as a retail trader, just kind of put some trading ideas out there. Not recommendations, but wow, look at this chart on wheat. Damn. Now this is a good example of your classic flag formation. See this? This is what we call in the technical analysis world a flag, right? There's a flagpole, there's a flag. Forget the name. Let's just pay attention or see what this shows us. The buyers are really jacking it up, okay? They're really aggressive buying. Eventually, some of these buyers are like, man, this is getting a little bit ahead of itself here. So I think I'm going to take a break. Maybe I'm the person jacking it up. Maybe if I leave the market, the price will come down and I could finish it at a better price, meaning a lower price. So some of these buyers decide to step away. And as a result, what happens? Well, it stops going up because you don't have those people jacking it up anymore. And it kind of trades sideways a little bit or a little bit down like it did here. So I want to show you just something that's really kind of cool here, which is the key to understanding the old flag pattern. All right. Think about it. Market's going up. Traders are jacking it up. All of a sudden, these aggressive buyers leave the market. As a result, what happens? You have much lower volume. Jacking it up. Buyers leave the market, give it a break, much lower volume. Same thing happened here. So continuation patterns mean the trend is going to continue in the same direction. So my thought here is, all right, here's wheat. Look at this resistance. Let's call this 688. If you're a retail trader, if this breaks out, check this baby out. This is a wheat ETF. So you could just trade this. You don't need to be a futures trader. This can give retail traders exposure to wheat. All right. Let's just go look at soybeans. It's like inflation is here. I mean, and I'm not even kidding when I say it might be more than 9%, assuming Biden leaves office in a few months or in November. It's just such a disgrace because this is all self-induced inflation. It's not like in the 70s when it was because of OPEC. All right, so here's another thing that may be about to break out, and we could kind of see that same kind of flat. See, now if you're really oh, that doesn't look like a textbook flag pattern. That's not the point. The point is, what does this tell us? The buyers are taking a break. When they come back in, they can jack things back up again. So if soybeans get above this, what can we do in the retail world? Here is your soybean ETF. Okay. Doesn't follow perfectly, you might see, but that's because this is different time frames. Soybeans basically trade around the clock, whereas this ETF only trades from 9:30 to 4. But for our intents and purposes, if wheat starts to break out, this is going to be a good place to be. And then let's just look over here at corn, see what that's doing. All right, nothing too dramatic going on here. I'm just going to go to the 1 year chart. But it has been trending higher since the end of February. And this symbol is easy to remember because it's just corn. All right, same thing. If corn starts to move higher, we can just kind of track this. We talked about that a few weeks ago about how the cocoa market was about to collapse, and it did. But this, you don't need to be a great trader or a former hedge fund trader, which, by the way, are a dime a dozen these days. But speaking as someone who actually was a former hedge fund trader, but we knew that this was going to collapse. This was an easy call. You know why? Here's cocoa for 45 years. Topped out around, I don't know, 26, 2,700. All of a sudden, last summer, just blasted off. Got all the way up to like 12,000. A move like this is not sustainable, especially in a commodities market, because if prices get too high, people will just stop buying that commodity. We're going to just stop buying chocolate, and more farmers are going to bring stuff into the market, so increase supply. So it's not like a perfect fit like some of those other ETFs we just looked at. So it's not going to move by as much, but in this DBA, this agricultural ETF, the biggest position is cocoa. So cocoa is going to continue to unwind, in my opinion. So there could be some more downside here. So those put buyers, that's going to be some opportunity. It's easier to make money on the downside than the upside because things go down faster than they go. But that being said, I think all those other commodities I spoke about are going to just keep moving higher. If oil holds and starts to rally, we're really going to get smacked again with another round of inflation, unfortunately. But at least we can make money as traders just getting on the right side of it. All right, everyone. Thanks so much. And I will see you soon.